as you might have noticed, we've got a top technician right here on the desk tonight, and he says despite today's sell-off and the recent weakness in the FANG stocks, the rally this year still has legs. So let's go off the charts with Chris Verrone. Chris, head on over to the plasma, and why don't you break it down for us?
Thanks, Melissa. Yeah, and listen, when we look at this market, I think one of the big differences here is the momentum surge that we've gotten off the low. 93% of stocks in the S&P are currently trading above their 50-day moving average right now. That is historically very rare. It tends to only happen coming off major bottoms. We got it off the 16 lows. We got it off the 11 lows, the 2009 lows. And when you look at what this means for future returns, the expectation is that would be an overbought reading. But when you're coming off a low, you want overbought conditions. It's a reflection of momentum. So looking out forward 6-month returns, when you start to get more than 90% of stocks above their 50-day moving average, your returns 6 months out tend to be about 9%. That's versus about 4% over the historical averages. So the forward returns when you get these momentum surges tend to be really impressive. And I think the other big story here that's underway, this is the equally weighted S&P versus the cap-weighted S&P. And as we know, the last 2 years have been defined by this very underperformance, very pronounced underperformance from the average stock. That is starting to change here a little bit. And if we put some lines on this chart, equal weight versus cap weight actually starting to break out here. So this is the first evidence we have in about 2 years that the average stock is starting to do better than the cap-weighted index or the FANG stocks. We think that's a positive. We think it supports the market here. I wouldn't be shocked if we pause, but you have good support in that 2650 range, maybe 2700. We'd be a buyer of anything back there.
I think Chris deserves to come on back over to the desk. I'm just kidding.
Black seat?
Jeez. A lot of people out there buy ETFs.
Yeah.
And if you had to pick between an equal weight S&P ETF or a normal market cap weighted ETF, which is the better? The better bet right now is?
For me, it's an easy call. It's the equal weight. I'll even give you one better. There's a reverse weight S&P ETF
reverse weight.
The Apples and the Amazons and the Facebooks become your smallest weights in the index.
Interesting.
And the smallest stocks become your largest weights. I think this market right now is about the average stock getting better. It's something we haven't seen in 2 years. We should welcome it. It means there's more things to do under the surface.
Except for the fact that for 2 years prior to the top last year, those 5 stocks that we're talking about were masking a lot of really bad performance in a lot of different sectors. So the fact that we've actually had some calibration, I think, is bullish longer term for the market. But again, I'd rather own the equal weight too, because I think MAGA is an accident waiting to happen. I think the QQQ, if you're looking for a play to the downside, if you're looking for any sort of retest back towards those Christmas lows, that's the best bang for your buck, because they're already struggling, the top 35%, 4 names, 35% of the way to the QQQ, the NASDAQ 100. If we do turn, that thing's going to flush.
Am I allowed to skate in Petey's lane real quick? Because
Are you going to talk options? Are you going to talk options? Or
No, I was going to actually mention the fact that if you look over the last now year and a half, 2 years, every time the VIX gets down to 13.5, 14, it's sort of pointed to a topping out of the S&P 500 for an immediate term period of time. I think that's what's going on now. You saw it get down to 13.5 or so. That's been the bottom of this thing. Now the VIX is north of 14. So I think the VIX is telling you in the next couple of weeks that maybe this market is going to turn.
And Guy makes a great point, because that's one of the things that I was talking about just the other night, in terms of what did I do with my portfolio recently. I took off a lot of stock positions and replaced some of those with call positions. And why would I do that? Because its implied volatilities are low, 14 right now in the VIX. And because of that, it gives you an opportunity to still be in the market, but with a lot less risk exposure.